This is Robert Kraft, and I'm your host on the Planet MicroCap Podcast. And with me today is a very special guest, Mr. Jake Taylor. He is the CEO of Farnam Street and the author of the Rebel Allocator. Jake, welcome to the Planet MicroCap Podcast.
It's a pleasure being here, Robert. Thank you.
It's a pleasure to have you on. So to get started here, as we do with each podcast, I want to get your background. I really want to know what led to where you're currently at today.
Sure. It's a little bit of a circuitous route, I would say. I got an undergrad degree in economics, and I had my family before my father and my grandfather both had worked in the energy industry, actually for PG&E, which is the electric utility for most of Northern California. And so I grew up climbing around on dams and, wandering around through power plants and stuff. So I was always into it. And I happened to get a job right out of college at the California ISO, which is it's a company that runs the electric grid for all of the state of California and does the market for bulk electricity. So my economics degree and my interest in energy helped me get my foot in the door there. And I did that for actually 12 years in total. But while I was there, I wasn't sure what I wanted to do exactly with my life. It was a great job, but I got into the MBA program at UC Davis. And my thought process there was like, well, if I want to go into management, this keeps my options open. And my first year of going into the MBA program, I happened to win this lottery to go back to Omaha and have lunch with Warren Buffett. And
sorry, yeah. I'm hearing. I read. For those who don't know, I read. I'm almost finished with Rebel Allocator, and I'm hearing many synergies already.
They say to write what you know, so I tried to include some things in there, at least that I've actually done in life. So I got to meet Mr. Buffett, and he was, as advertised, was incredible. And up until that time, I'd been into saving and investing and kind of business, but I wouldn't say that I really had a framework. And after I learned more about Buffett after the trip, because I was like, gosh, how's this guy? He's so smart. How did he figure all this stuff out? I recognized that, I'd been a value investor my whole life. I just didn't know that's what it was called. I loved getting a deal. I loved buying something on Craigslist and selling it somewhere else, like an arbitrage. I was always messing around with that kind of stuff. I just didn't know that that's what it had a term for when you did it, when you were buying shares of businesses. So when Buffett says that it takes it like an inoculation, for me, it was that inoculation. It was just right away. It made perfect sense to me. And it made it whereas it's hard for me to imagine doing it any other way and feeling like I would be logical.
Mm-hmm. Well, what's interesting about that point is you're not the first person I've talked to on the podcast that had a very similar experience where that's just how they were and they didn't realize it was called the value investor. Like Jeff Gannon from Focus Compounding, I remember he said the same thing. He had the exact same experience as you did. But yeah.
Well, and I think that's because it stems from first principles of, there's a lot of engineering concepts to value investing, whether it's margin of safety. You're just, of course, if you can get a deal on something that probably lowers your risk and potentially increases your reward.
Mm-hmm. So I have to ask, I'm sure my audience just really has to know. So tell us a little bit more about that first lunch meeting with Mr. Buffett. I mean, what was that like? I have to know. It's an opportunity of a lifetime.
So you travel into Omaha and you get in the morning, and then we took a bus, and there were, I think, 25 of us from Davis, and there was another school there also that was meeting at the same time. So Buffett will bring in multiple schools at the same time, and you go to Berkshire headquarters, take the elevator up in groups, and you go in and you sit in this kind of bigger meeting room. And all the chairs are facing up towards this podium, and there's Cokes all along the wall, lined up if you want to have a Coke for breakfast. And
a Diet Coke, I guess.
Yeah, there's Diet Coke too. Yeah. And he kind of shuffles his way out of some back room to the podium, and he does this whole 1 billion, 2 billion, 3 billion joke that he does every time he gets in front of a microphone. And he gave maybe 5 minutes of prepared speech. And then after that, it was just Q&A. And, for probably a good 2 hours, he just kept taking questions. And then after that, we all traveled to Garatz, which is his favorite steakhouse in Omaha. And he bought us all lunch, and he wandered around the tables, like talking to people. And then after that, he went outside, and out in the parking lot, he took a picture with everybody. If you could get an individual picture. Quick story on that. That's kind of funny. Not funny at the time, but so we had 2 cameras going to take the pictures, and it was my turn, and I'm getting all buddy with him, and I look at the first picture, I get it later after, and oh man, they cut my face in half. Dang it. Well, good thing we have a second one. Well, look at the second one, and they'd actually cut his face in half. So
did you have to?
Well, I looked into trying to can I Photoshop these together somehow, but it would turn us both into looking like aliens. So it didn't work out. I find it to be very funny at the time, but that took about 10 years before I was pretty salty about it for a long time. But they say that tragedy plus time equals comedy, and I think that's true good in this case.
Oh, that's for sure. Well, I have to ask too, did you get a tap on the shoulder from his assistant afterwards, and to talk a little bit more about a special project?
No, that definitely reality differed from fiction at that point.
Sorry, I'm going to be dropping a lot of Rebel Allocator references. I highly recommend everybody go read it. It's actually a great read. I really enjoyed every minute. I'm still about halfway through, but I'm really loving it.
I appreciate that.
Oh, for sure. So from that meeting, that humble meeting with Mr. Buffett in Omaha, I'm assuming, what then led you to start Farnam Street, and then also write the Rebel Allocator?
So I was at the time, my boss at the energy place was actually a big Warren Buffett fan as well, and he was leaving to start his own Buffett-inspired partnership, identical partnership that Buffett started in the late 50s. And I asked him, well, can I just be an intern at your fund, and I'll sweep the floor, you don't have to pay me, I'll just show up? And he was like, yeah, of course. So I spent the next year basically learning a ton from someone who had been studying all this stuff for a decade already. So it was a huge advantage to work with someone who was so good. And I was still in the MBA program, and I would be reading a lot of things that that were part of my hedge fund internship, and maybe sometimes to the exclusion of my business school readings. But it was just more interesting. But I would be sitting in class a lot, and I would think, gosh, I'm learning all this stuff about business in my internship, and it's almost saying the exact opposite of a lot of the things that I'm learning in my business school. Why are these things disconnected? And I eventually talked that person in my boss at the internship into teaching a class with me at Davis, and kind of a way for me to get credits for the same time that I'm doing my internship, trying to double dip,
Yep. And,
I had some friends who joined us, and I think we had about 15 people who did it that first time. And it was a value investing class at Davis, and that's what we called it. And it was really such a great learning opportunity to be forced into creating a curriculum and then to have to teach it to other people. What was amazing was that then after, I graduated, and then the next year, some students contacted me and were like, hey, would you possible that you might come back and teach that class again? We heard really good things about it. And we were like, okay, kind of give back to our alma mater or whatever. That's fun. Mm-hmm. Then we had 30 students, and then the next year the same thing happened, and we had 40, and then the next year it was 60. And then at that point it started getting a little bit stepping on some toes in the finance department. And they were going to allow us to make it into a real class, but then we would have to show up to faculty meetings and things like that, and we weren't that interested. We just wanted to have fun with talking to the students, and most of the class was some principles, but then talking about examples that were happening in real time. So for instance, one of the funnest ones we did was Michael Jackson had recently passed away, and we tried to come up with a valuation, like what is his catalog worth? What would you pay for it? It's kind of a I mean, just fun, like discounted cash flow ideas around that. Like, what would so long story short, that boss that I had at the internship, we liked working together so much that we started Farnam Street together and folded that hedge fund into Farnam Street, and now we've expanded our service offerings to other things, and including managing retirement accounts and various other things. So it's been a really fun ride. I didn't come at it from anything close to the traditional path of go work at Goldman and then get recruited out of Goldman to start a fund.
Right.
We just liked what we were doing and tried to learn the best we could as we were going along and figure out what made sense. And, we were always one step behind probably from a regulatory, compliance, trying to figure out what do they expect us to be doing here? Because we didn't come from that kind of background. But
right.
But I think it also it's an advantage in a lot of ways because you don't then have some of the you don't think like everyone else also.
Right. So during when you're still interning and also teaching, I mean, you were investing too at the same time, right? Like you were actually going out and putting your money where your mouth is and actually doing it. So, right. I mean, in essence, you were honing your skills in some sense.
Yeah, for sure. Like that was a great time period. That happened to be the first class we taught was 2000, must have been summer of 2009. So, I mean, we had so many great opportunities. Like we could talk about businesses that were on sale all day long. And it was funny. I mean, it seems funny now being 2020 and the bull market that we've experienced, but in the last years, it must have been 2011. We were starting to feel already like, gosh, there's not a ton of things that are still on sale like they were. In fact, we ended up directing the students towards Japan because they had just had the Fukushima event there. And there were things there were tons of stuff on sale in Japan at that point. So we had them digging around in Japanese filings and looking for deals there. But yeah, it's funny to think. You kind of long for those days when there were so many businesses that were on sale. Sure, it sure felt a lot easier than it does today.
Oh, I was going to say that's for sure. Well, from your background and now your teaching experience and working with these students and being a part of an MBA program where, I have my MBA too, so I totally understand where you're coming from, where there seems to be this gap between, real true value investing in this Buffett idea. And we covered that a little bit in some of my classes at school, but it was really just all about teaching the basics. But then it almost felt like a value investing class was kind of that next level where okay, now you have the basics. Well, now this is how you make money, I wish I had that like that. I mean, luckily I have this and podcasts and my own company, but if I were just in school without what I have now, I would definitely feel that same frustration.
Yeah, I think that was definitely part of it, like kind of a practical application of a lot of the things that people were learning in finance classes. Although I do have to say that we figured out pretty early on that actually the accounting was woefully underprepared for what was. I mean, they understood it, and they could. If I told them well, what's depreciation? They could recite the textbook definition of it, but they didn't know what it meant to an actual business person. They didn't know what the cash flow implications were. That was really the biggest part. Was I think the B school neglected cash flow statements to their own detriment. And we had to come in and we actually created our own little accounting class for one of the days to just try to get them caught up so that we're all speaking the same language and they have a better idea of, what's the accounting to the business person? I mean, why does this matter? Not just can you recite the definition of this or put it in a T account or something.
Well, I said all that too because it makes so much sense now why you wrote the Rebel Allocator. I mean, I'm not so sure as to how much of a writer you were prior to that, but here you are now. Now
sure.
You're there. You go. So I mean, from all that experience, what was the main impetus? Did somebody tell you dude, you should write a book? Just do it?
No, probably the opposite. More like, dude, don't write a book. What are you doing? Nah, that's not true. But the biggest impetus were a couple things. One, I felt like I'd learned a lot of interesting things about capital allocation just from studying it in investing, and I felt like there wasn't a book that gave that practical kind of application to a business person. I mean, there were lots of examples. Outsiders by William Thorndike is a fantastic book, one of my all-time favorites, and it very neatly describes what the caricature of this type of CEO and kind of some of the moves that they would make. But I don't think you could say that there was the framework that maybe would lend. If you weren't that person, how would I know how to make the right decision then? And that was the little gap that I saw in the marketplace of books that I thought, gosh, if I could fill that and do it successfully and just have that little bit of a nudge to have someone think for themselves, a decision maker make a little bit better decision, that would be a pretty cool thing to impact the world. Even though it's totally, I can't measure it and I won't get any credit for it, and that's fine. But if the idea stuck that they made a little bit better decision and maybe some project that shouldn't have been funded doesn't get funded, or maybe a buyback at a stupid price doesn't happen, or an ego-driven M&A event doesn't happen and people don't get laid off when they shouldn't have, like, it can echo out into a lot of places. And I thought that'd be a cool little pebble to throw into the pond and see where it ripples.
Mm-hmm. So I really wanted to dig into the book a little bit. It's been out now for a year, so if you haven't read it, spoiler warning. But there's so much in there that I don't think it's even really possible to spoil it. If anything, I hope some of the things that we talk about today will get you excited to want to go and buy the book and give it a read. But so real quick, story follows. Our main character is Nick, aka Jake. Nick, and
some of it, yeah,
some of it, and he's a journalist background. He went to go work for basically a hedge fund kind of
private
equity, right? Private equity situation, and he won a lottery to go and meet with this billionaire, Mr. X, and he tells him his journalist background, asks some good questions, and basically they offer him a special project to write, firstly, a profile about him, and then hopefully that would lead to a biography, long-form biography about him. This is too funny. I'm like reading it back to you. This is too funny.
So you get a little bit of insight as to how unoriginal I am.
Well, look, we're just waiting for part 2. We can't wait to hear that version. But basically, he's writing this book or writing this profile, and he's learning all these lessons from Mr. X, and that's really the meat and potatoes of the book. So I wanted to go through a couple of them, and really the main one that you work off, or Mr. X works off of when teaching Nick about different business principles and how Cootie Burger became AKA In-N-Out. When I was reading it, I wanted to have a double-double, and he used the CPV graph and model. The CPV being cost, price, and value. So where was that derived from? Was that something you pulled directly from some of your teachings that you did out there, or was this completely original for the book?
No, I mean, I wish I was smart enough to have thought about that when I was teaching. But I did. The idea that cost, price, and value have to be in a certain order for economic sense, or for anything in the economy to persist, came from a really underrated book called Nature of Value by Nick Gogarty. Mm-hmm. I found that book to be brilliant myself, and I'm always surprised that it's not listed as one of the better kind of value books, or any business book for that matter. But in there, he called it the rule of economic law or something like that. I'm butchering it. Or no, the law of economic survival. That's what it was. Sorry. And so he put those into order, and I kind of was just playing around with them one day, staring at my notebook, and I thought, gosh, this is two-dimensional right now. It's just kind of linear, like cost, price, and value along a spectrum. But what if I made it a little bit like deeper dimension and now like created an area within these things? And that's how it ended up having, you could add, profit and brand as well to the equation, because you can see, visually then as you move around the price, you can change how much profit or brand building that a company can do. Mm-hmm. And I wanted to start out there with, when you talk about capital allocation, a lot of times people just think that that's like, dividends or buybacks or M&A. Well, that's a very small component of capital allocation. And most of the time and most of the money gets reinvested back into the business. And that's actually where most of the decision making happens, and the most important decision making, honestly, because that's the part that goes more towards delighting your customers. Mm-hmm. So even if actually, like I did this for Berkshire one time, just a little example, Buffett is considered the greatest capital allocator of all time. But if you look at just purely cash flow, if you just look at pure revenue of the business, so this is money coming in the door, how does it get spent? He's only responsible for about 20% of the money that's coming in the door. The rest is being redeployed by the subs, and made those capital allocation decisions on the other 80% are being made by all the subsidiaries below him. So that's why I felt like I needed to start down at the basics of, cost and price and value and how does it interact with your customer. And then we can build our way up toward all the way up to buybacks and dividends and the like.
It's interesting because there's 2 points I wanted to go from on that. First, just more recently, I forget exactly what chapter, but where Mr. X was teaching Nick about how, you start off at the family level and then you keep moving up, and how at each level there's a way in which that if we're all on the same page in terms of our capital allocation, that will reflect at each level in the business.
Mm-hmm. Yeah. There's almost like a fractal nature to it, where or little like those little Russian stacking dolls, where right. Like if we do the little one right, and then the little bit bigger one fits, and the little bit bigger one above that fits, and theoretically they should all mesh together.
Well, it goes beyond culture. It comes down to just actual fundamentals of our business. If you're doing it right at the very at the smallest level, that should also be how it is at the highest level.
Yeah, and that's I think when I see a lot of businesses nowadays that are not profitable, and I understand the argument that at some point they're going to reach some scale where the fixed costs that are weighing down the profitability will be spread amongst enough customers to then they should be profitable. However, I am a little skeptical that that's true for all of these businesses, and some of the unit economics that I see, which is really that cost, price, and value, like you could call that unit economics. It's a little bit troubling for some of the ones that I see, where it's like, well, we're losing a little bit on every single one, but they're trying to make it up in volume, right?
Well, I'm already doing the triangle in my head where it's like, okay, well, if the triangle goes this way.
Yeah.
So the other point that I wanted to bring up that you mentioned a little bit just earlier is the idea of this zero-based budgeting. I was really digging that whole theory. I mean, it makes so much sense. And the part that I think gets lost on most business owners, from what I've seen in doing my interviews with CEOs over the years, is that there's that lack of ruthlessness when it comes to, look, if this is not adding value to your customer's experience, just drop it. Do you see that on just a daily basis, and that's why you wanted to include it in here?
I mean, that came from so 3G is famous for using zero-based budgeting, and they actually got it from this book by Bob Pfeiffer called "How to Double Your Profits in 6 Months or Less," and the credit goes to Bob, because the really important thing there is not so much like you're not just chopping budgets, but what you're doing is you're making sure that you have enough resources to do the things that you need to do to make your customer happy. And when it's, when that resource is going towards the private plane of the CEO, or artwork in their office. None of that is doing anything to make the customer happy. And that would be then what Bob would call non-strategic expense. And what you're really trying to do is cut the fat to leave muscle that can then be exercised to really make the customer happy.
Mm-hmm. And by the way, I just have to ask, are you a shareholder in either 3G or Berkshire?
Yes.
Okay, good. Actually, I found
well, there's multiple 3G entities to be a shareholder in, so
this is true.
Yeah.
There's actually a few quotes that I found that I just loved, and the one that had to do with when it comes to the various levels is if every family handles their own business smartly, it's likely to work out well for the whole kingdom. I might get that tattooed.
That was Adam Smith, I think, right?
That was Adam Smith, but it really just it just made so much sense for the book and where you had it in there. It worked out great. If you can't raise price, you should focus on controlling costs, obviously. But my favorite was, in the long run, everything becomes a toaster. That was my okay. That's the tattoo, not the kingdom one.
I think that one. If I remember right, credit goes to Bruce Greenwald, who's a teacher at Columbia, who I think is the one who said that. I don't know if he said it first, but that's where I picked it up from.
Well, you know what I really loved about the book, and I know, look, listen, I'll take a commission on each book sold if you really want, but what what I really loved about the book is you made mention how Buffett makes very difficult concepts simple. But what you did is you actually were able to take those simple concepts and create great anecdotes, simple anecdotes out of them, using Nick as your spokesperson. That's really what I took from it, and that's why I enjoyed reading it so much.
Yeah, I tried to use Nick as a foil to ask kind of the questions that we're maybe all embarrassed to ask at this point, right? Mm-hmm. And he's so young that he doesn't know any better to be embarrassed about asking those, like, well, why is the emperor not wearing any clothes type of questions?
Right.
And then that gives Mr. X a chance to boil things down in a way, like down to a level that hopefully anyone can grasp. Like, there's no previous knowledge assumed that you need to come in to be able to get to pick things up.
Mm-hmm. So with that, I wanted to move on in the interview to some more of your investment philosophy, and just because I know you talked about this on Tobias's podcast, but I love that story that you guys talked about when I guess Charlie Munger called you to tell you that he loved the book too. Was that happened?
I don't know if I'm not sure it's fair to characterize to say that he loved the book. He did call me to talk about the book. What he really called me to do was to encourage me to actually get it made into a movie. That was his real words.
Okay, so that's what I wanted to do. I wanted to ask the follow-up from Tobias's interview to that. How's the script coming along?
It's coming along. I have somebody who's very passionate about it, who's working on it right now, and knows much, much more about that world than I do. It's that type of thing is such a long shot, as you know. I mean, living in LA, everybody's got a script, right? And so sure. It's not. I don't have the highest hopes I wouldn't assign a high confidence interval that Dude, I'm sitting next to Munger and eating popcorn with him at any point soon, but it is kind of my daydream sometimes.
Well, dude, I think Adam, this is right up Adam McKay's alley, right? I mean, this is his follow up to The Big Short.
Big Short, yeah.
So with that,
whenever it gets Margot Robbie into a bathtub explaining like cost, price, value, that's fine by me.
No objection here. So with that, I want to shift now over to Farnam Street's investment philosophy. Again, everybody go buy the book. Please go and read it. So with that, very simply, what is Farnam Street's investment philosophy?
It's actually, I should probably be better at explaining it, but I always find it to be a little bit difficult because we really are just trying to do what makes sense to us at any given juncture, and try not to be too dogmatic about even the flavor of value that we're selecting. So I mean, I'm comfortable buying things that have really low price to book that are just, it's cheap. I'm very comfortable buying nets if I can find them. I'm comfortable sometimes paying up a little bit for a business that I think is higher quality and has the potential to be provide good returns on capital and hold it long enough to approach more like the return on equity than necessarily the initial earnings yield that you pay. Mm-hmm. So, and we don't fit into any style box, even in the value world. We want to either. Like, I think that kind of constraint sometimes can blind you towards the more obvious opportunities. Like, this game is already hard enough. Mm-hmm. I don't need to tie any more hands behind my back by saying, oh, we only buy low price to book and we don't care about business quality, or vice versa. I would never buy nets. Like, those are a sucker's bet. I only buy high quality businesses. I don't really want to be in either one of those camps. Mm-hmm. So it's kind of a dissatisfying answer, but it's just trying to make sense of the world and the opportunity set at any given time, and try to do what's smart.
No, I mean, look, this is your own discipline. Is some people have the discipline of, okay, we're just in that camp. Your discipline is say, look, we're going to stay open to just the right opportunities.
It sounds good, but then also, when you take the guardrails off, you can talk yourself into things. And I'm always a little careful about that as well. Like, am I making sure that, you give the degree, you allow these degrees of freedom to go where you think the value is. Well, nobody bought the .com stocks thinking that they were going to lose money, right? Like, they all thought that they knew something special about it that no one else understood. And obviously that didn't work out great for them in the late 90s or early 2000s. So I am always cautious that to me, price is the most important thing. And the price doesn't tell me what it's worth, but it does tell me what the assumptions are that everyone else is kind of imagining about this business. What are their future? I'm imputing what their future expectations are for this business based on the price. And do I agree with that, or do I not? And for whatever reason, why do I think that I know something more than they do? And it's a very arrogant thing to buy a stock, because you're in essence saying that person was wrong to sell it to me for that price. And conversely, it's very arrogant to sell it. I think I'm getting away with something, and that the person buying it from me thinks they're getting over on me, right? So one of us is probably wrong or right, and maybe the time frame can be different, so we can both be right theoretically, but or maybe even wrong both. But it is. I try to keep humble at the same time as allowing myself the degrees of freedom to go where things make sense.
Mm-hmm. And look, it could end up being a win-win situation if at the point when you're trying to buy versus when you're also trying to sell. That especially when you're looking at small, micro, nano caps, you could be in a situation where you're trying to sell it at a price you thought it's overvalued, but at that point for the buyer, they're thinking, well, I have a little bit margin of safety because the price is here, they hit all these other metrics, so it could just put a little
differences of opinion, yeah.
A little positive spin on that 2020. but in all seriousness, I mean, for you, this is a microcap podcast. I have to ask, do you tend to look at any small, micro, nano cap opportunities as well?
Yeah, sometimes, depending on the situation. We've owned some things that were under 100 million market cap, and have done well in them, actually. Like, I personally enjoy it, and I think it's actually like probably where the advantage lies if you're a smaller investor. It doesn't always mean managing other people's money that you can do it as readily, because the quotational noise can be so extreme sometimes that if your clients aren't prepared for that, you can kind of that horse can buck you off before you can realize the good outcome that you think you have a chance at realizing. Does that make sense?
Oh, 100%. I mean, that's what I hear time and again from a lot of fund managers, asset managers, is that, even if they're smaller and more nimble, it's still very difficult.
Yeah. And even, I mean, we're not managing a ton of money, and the liquidity sometimes can be a real pain getting into and out of positions. across, when you have hundreds of accounts, you're trying to get everyone a full allotment. And it can, you could be the only buyer for days on end. And we've done that before. And then you're the only seller sometimes for days on end. It feels like, it's a different world. It's one that I like and I'm comfortable with it, but only in, I not across probably the entire portfolio.
Right.
So
yeah,
it's same thing. It's, just trying to do what makes sense.
No, I totally get it. So, and so, because you have, dabbled, in the small micro nano cap space management. I love asking all fund managers about, how you guys tend to approach talking with management, assessing management. So what's your approach? Do you have your own Farnam Street method, or do you actually tend to not even want to talk with them?
I don't mind talking with them. And we have, and, lots of times, and it's, I don't know if it's always fruitful. Sometimes it feels like, listen, if you're at that level, you're a pretty good salesperson. You have to be to get to the CEO of any company.
Right.
And as the fund manager who it will be being sold something at that point, like you just have to be aware that you're dealing with someone who is a good salesman. So I think there is definitely the potential to fall for like halo effects where you think like, oh man, this guy is a hidden gem. He's telling me everything that I want to hear. I think that has to be backed up by what they do as well. And so what I try to do there is I do what I call like an empathy exercise. Mm-hmm. I look at their financial statements through history, their operating history, and then I look and see like what would I have done if I were them if I was in their shoes, what would I do at this juncture? Like I know what their stock is trading at, like as far as compared to the fundamentals, what did they do? Did they buy back or did they not? Did they issue shares? Did they do a dividend? I try to put myself into their shoes and to imagine what would I do. And the more that the answer comes back like, wow, I think I'd do the exact same thing that they did, the more that I have confidence in that management. Mm-hmm. And so it's not so much talking to them and what they say. I like to see their actions, and their actions show up in the financials. Like the financials tell me a story. And that's, I could piece together then like what decisions were made at that point. And I think that gives me a little bit of an insight into, are they a good capital allocator or not?
Mm-hmm. And look, not all these businesses can have a Mr. X on their board. I mean, that's just what it comes down to.
Yeah, and I mean, I try to be.
Sorry, that was a bad joke.
No, it's actually a good point because I do try to fill that role occasionally, and talk to them about that, and say, like looking at your different opportunities right now, your stock is trading at X right now. Do you think that you have internal reinvestment things that will have a higher hurdle than that? No? Well, maybe we should think about buying back our own restaurants, to use the concept from the book. It's just as valid as building new ones. Like, how are you acquiring those? Mm-hmm. So I try to use some of the same principles and give them a little bit of some of my insights. I think I liked the idea of sending them a copy of the book and like, hey man, here's the playbook if you can. I don't know if that works very well. Like, no one wants to have a book shoved on them in that way. But
just pitch it. Look, it's a quick read, 245 pages. It's easy.
The
knock it out in a weekend.
Goes down very easy. Just listen to the audiobook.
At 1.5 speed, you're fine. You knock it out in 2 hours.
Yeah, exactly.
So I also wanted to mention that you also host the 5GQ and the Hikecast podcast. I wanted to know, what would you say are some of the lessons or insights that you've been able to apply to your own life and investing philosophy since starting those podcasts?
Yeah, I think, the reason why I started both of those, one, for the 5 Good Questions, I I wanted really to encourage people to read more books, just because I'd gotten so much value out of reading books. And I think it's still such an underappreciated hack. Maybe hack's not the right word, but the value proposition of a book, if you think about how much time someone put into it. And now I have a much more visceral appreciation for what that takes, having finally written a book. The heart that you have to pour into it, like the way that you just stress over it, that much effort by a human who's an expert in a subject to distill what they know for you, and you pay them even $15 for a book. I mean, you're literally paying them like a penny an hour. I did the math one time. That, like, for how much that they worked on that book. Mm-hmm. It's unbelievable. There are very few things that are a better value proposition. So I wanted people to read more books. And the other part of it too was that I would watch somebody go on CNBC when they had a book coming out and just get talked over. And it would drive me nuts. And I'd be like, he was just about to make a good point, or she was just about to make a good point. Be quiet and let them finish their thought. And I thought, well, nowadays it's like, it's pretty cheap. And this was 2014 when I started 5 Good Questions. It's relatively cheap to produce these things. Why don't I give them the platform rather than me just complain about it? Why don't I do something about it? So that was the impetus for starting 5 Good Questions. And with the Hikecast, I was just looking I wanted to spend more time outside, really hanging out with friends and like wandering around in nature. And this was a good excuse to like tell my wife that I was working, when really I was just, going out for a walk with a friend in the woods and having a chance to talk about, a little bit deeper things in life. And I found that nature, like for some reason, it really just like cuts through much more than if you're sitting around a table with a microphone between you. You don't measure your words as much, and not in a. I mean that in a I think you're a little bit more your authentic self when you're out hiking with a friend, and you're just kind of it's a little less of a hurried pace as well, and I found it to be a very relaxing thing, and everybody who's done it now with me is like, God, I can't believe how much fun that was. I forgot that we were recording, and I was like, perfect. That's exactly what I was looking for. So those are the impetus behind both of those. They're really just more like kind of scratching my own itches, and a way to meet people and give back in ways.
So by the way, I hope I haven't talked over you at once in this interview as a published author yourself. I don't think
you've been lovely.
Oh, thank goodness. So I have to ask then, you've done 5GQ since 2014, just started the Hikecast relatively recently. Would you say, are there any kind of lessons or things that you pulled from those that you're like,
sorry, I didn't answer the original question.
You're good. Yeah. It's fine. I should ask why first.
Lessons I've learned, I guess maybe from the Hikecast, maybe the only lesson I've really learned is that we all kind of worried about the same things deep down. And it can feel like, gosh, I'm the only one suffering from this right now. But I don't think that's true. I think we all have the same sort of existential questions. We all have that sometimes feeling like, God, everyone else has their S together and I don't. And what am I doing? And does anybody even care what I'm working on? And we're all kind of feel like we're toiling in obscurity a lot of times, and it's okay. Like we're all in it together. We just kind of don't realize it because no one wants to talk about it.
Right. It's like we're all in the process of fighting the good fight, and we just are all going about it our own way.
Yeah, and I think sometimes our culture celebrates work a little bit too much, and the hustle and the grind. And listen, I'm all for like figuring out what you're passionate about and giving it your all, and even burning the ships behind you to have to fight your way out of it. But this fetishization, how do you say that? I'm not sure.
You said that was a better guess than me.
We fetishize hard work in a way that I think sometimes can only lead to unhappiness for us because we just become so monolithic in how we spend our time. And so, taking projects like I kind of do it on purpose too, to control my own time a little bit and like force me to go outside, force me to read books that maybe I wouldn't have come across otherwise. So all my actions are just as selfish as they are for giving back. I just try not to. I try to emphasize the other part, that it's more about giving back. But there's always something in it for me as well, if I'm being honest.
Hey, look, I mean, when it comes to charity or giving back, I mean, ultimately there has to be a little bit of selfishness there in order to, because I mean, we could go on a whole tangent on this, but is there any
altruism?
Well, is there any true selfless act, like true 100%? I think there'd be many philosophers out there that would argue that there isn't, but that's okay.
As far as things learned from 5 Good Questions, I would say that it's been amazing to see how into something, whatever the topic is, that someone can get. Mm-hmm. So I did this interview of a guy who's he's like, what I think they call it, like entomologist, which is like studies bugs. Mm-hmm. And he could talk for an hour and it would be just absolutely fascinating about bugs, like insects, spiders, all kinds of stuff. Like he lives for it. And what I realized is that everybody has their version of bugs in their life. Mm. So if you're talking to someone or you're at a party or whatever it is, and you're talking to them and you're like, gosh, this person is boring. Like I need to find someone else to talk to. You just haven't quite worked hard enough to find out what their bugs are. And when you do, you'll be amazed at how they open up and teach you things and have all these insights that you had no idea were floating around in their head. And I think we're all sometimes a little bit guilty of wanting to only like talk to what you perceive as like the highest status person at a party or whatever it is, or a conference. But there are lots of smart people who know tons of things all around you at all times if you're just curious enough to dig in to like find what their bugs are.
I got to tell you, that's like my go-to move. You're at a party or you don't know anybody. I mean, ultimately, at the end of the day, if you truly care and especially if you're going to be at that party for a while, why not ask them, so what's your thing, man? What do you like? What's your, and you'll realize that you might learn something new about a topic that you had no idea. Or at the end of the day, at least it was an interesting conversation where you heard somebody be passionate about something.
Yeah, that's fun. Some people hide their thing a little bit further away from the world, so you have to dig a little bit more. Right. But everybody has something if you dig enough, and it could just take a little bit of time. But it's almost universally, it's worth that extra couple shovelfuls of dirt of small talk if you can find the thing that sets them on fire.
Luckily, my thing is just asking questions, so that makes it easy.
That's a beautiful thing. Like I read somewhere, I don't know where it came from, but it was if you go through life pretending that everyone has a sign on them that says, I want to feel special, and then just like read it and see like, oh, I wonder how I could do to make them feel special today. Like, I think you could go through life in like a lot of the friction of life that befalls on us. You might be able to avoid it if you went through life with that kind of approach.
I tend to go through life very much like Chance and say, I'm an idiot. Let me just ask a whole bunch of questions and hopefully I get a little bit smarter.
I think that's a good approach. I think a Socratic method is not a bad idea.
It's got me this far, I guess. We'll see. But so one of my favorite questions to ask everybody that I have on here is, what would you say is an investing experience that was the most influential for you, both to your current thesis and maybe the most influential one that you've had throughout your whole life?
Sure. So let's rewind back to like 2010, 2011, and we'd been running the fund for a little while, and when you're young and you're still early on, it's hard not to have that little bit of imposter syndrome. Mm-hmm. You're kind of just copying what other people are doing. It makes sense to you what they're doing, but you don't have that like deep in your bones conviction necessarily. It takes a little while to get to that. And I went to a different fund manager who I really looked up to, really big influence. Went to his annual meeting, and he had been buying similar things that we had been buying in Japan. Mm-hmm. And I was like, it was like the great confirmation bias. Like, oh man, we're in there, and this, he's doing it too. We're so smart. even I actually saw Buffett on CNBC during that time period, and he had on his desk this little book that has a pink cover on it, and I recognized it because it's the Moody's manual for Japan, and he had been fishing around in his private account buying Japanese stuff. So I was like, oh man, we're so smart, we're like on top of it. And then the next year, go back to that same meeting, and the fund manager had sold all of his Japanese stuff and had come up with had pulled some quote, I think, from Graham about how why this didn't make sense anymore. You shouldn't be wasting time with these, businesses that are so cheap. He had this quote from Graham that was about how, buying something that cheap and not high enough quality business didn't make sense. And he had sold all of them. And it made no sense to us because it was the cheapest thing on the planet at that point. And we came back from the meeting and actually bought a bunch of more. We doubled down. And it wasn't maybe 6 months later, they just started going up like crazy. I don't know why. There was no real good reason, but just like there was no good reason why they were so cheap anymore, it doesn't take a good reason for them not to be cheap anymore. Mm-hmm. And they're just jumping every day. And that was the first time that I felt like, okay, I have the confidence to do this. Confidence in myself, the conviction when I believe in something to double down when it makes sense. I don't need someone else's approval or their validation for it to make sense. And that was, I think, when I actually became a real investor. Before that, I was pretending.
Mm-hmm. So then, other than buying the Rebel Allocator, what advice would you give right now to new investors looking at investing in the stock market?
Are these people who are just trying to build wealth, or are they interested in business and ownership?
Let's say all the above.
Okay, well, let's carve out the person who's not interested in investing but just wants to save money and build wealth. Mm-hmm. I think it's an unpopular opinion amongst value investors anymore these days, but probably indexing is their best bet. I will caveat that by saying it's probably never been a worse time to index based on the general price levels. But if you started dripping money in today and you kept buying as it was going down and buying and you bought all the way through the dip and all the way back up, and you just kept buying for the next 20, 30 years, I think you'll do fantastic. And you can golf and do all the other things that you want to be doing instead of researching businesses and save a ton of time. And there's nothing wrong with that. However, if you are interested in business and you actually want to, make individual stock selection, then I think the biggest thing that you can do to improve your chances are a couple things. One, you have to keep score for yourself. So that includes getting a journal, writing down your predictions about what's going to happen, keep score, figure out where the arrow actually landed, and don't go paint the bullseye around afterward. We're all guilty of this to different degrees. We all think that, oh yeah, I knew that was going to happen. Well, unless you wrote it down, you probably actually didn't know it was going to happen. We trick ourselves all the time. Yep. So keep score with yourself. You have to close that feedback loop of where you made mistakes. Otherwise, you're much more likely to just keep making the same mistakes over and over again. Mm-hmm. The second thing would be that I think you have to read widely. And if you're just reading all the other books that everyone else is reading, the chances that you're going to have a variant perception about a business are exceedingly small. And if you don't have a variant perception, then you don't really get paid that much in this game. It's when you have to be right when everyone else was wrong. And then you have to have them agree with you later. Right. And that's the trick to winning in this game. If everyone else also recognizes that this, whatever it is a good business, and that's already priced into it, you don't have any real unique insight paying up for that business. That's not really how this game works. And I think that unfortunately happens a lot where like, oh, I use Netflix all the time, or I use Google all the time, or whatever company that you have a lot of experience with. And you feel like, oh, well, I know this company. Well, maybe you do, but there's a lot more behind that than just, like I have an iPhone, therefore Apple is a great investment. Like there's so much between, the disconnect between those two things that you have to fill in with more understanding. And you have to understand more than the other people who are buying. And that is a difficult place to get to without a lot of work and without a lot of reading widely. The other thing that I would say is that 50 years ago, any information that you had more than the other person was a huge advantage. And so whoever had the most information tended to win the game. So if you look at like how Buffett got successful early on, he's digging around in city filings of, different companies, things that they had to report to a county or a city or a state that weren't reported to anywhere else. Like no one else was getting that information. Or he's, taking cocoa beans on the, tickets down the train somewhere placed to arbitrage. He's doing all these things. He had an informational advantage. Nowadays, information is so far, it's a flood. Like we all have more information than we can use. Now having the right filters is how you win this game. And Jim Chanos had a pretty good analogy about this. He calls it like you're peeling the layers of an onion. And at the very base of the onion, the inside of it, is the actual SEC filings. And that's where you should probably be spending most of your time. That's where the highest signal to noise ratio is. Then outside of that, you have companies' annual reports and their conference calls and anything else that they publish. And now that's a little bit diluted from SEC filings because there's a little bit of story to it. Like they're telling you a story. There's some spin. Now we move outside of that layer to sell side research and, different reports, other investors' versions of what this company's worth and their pitch decks, all that kind of stuff. And that's a further abstraction away from that core of the SEC filings. And then finally you get to the outside, and that's like message boards and Twitter and stock tips and all the noise. I would challenge you to think about, where are you spending most of your time in the onion? Are you spending it down where like the highest signal is? Or are you out in the Twitter sphere, and that's where you're getting most of your information, and that's where you're not doing a good job of filtering information at that point then. So those would be my recommendations to a young investor. That's perfect.
Well, with that, where can my audience go and find more information about you and go and buy their copy of the Rebel Allocator?
The Rebel Allocator is on Amazon, print, digital, audiobook, and thankfully I found someone who can read the book better than my nasally voice, so you don't have to worry about that. And then as far as Farnam Street goes, like we're online at farnam-street.com, and then against everything I just said about don't waste your time on Twitter, I'm on Twitter at FarnamJake1, I believe is my handle. I spend probably a little bit too much time there, but it does serve a good purpose, and like it's fun, and you meet some amazing people as well. Yeah. And finding your tribe is also an important thing in the world, and it is one of the better ways to find a tribe. And especially if you can meet people in real life eventually, it's actually a pretty useful tool. You just have to be careful with it and not let it rule your life. And it is addicting, so you have to be be careful with the heroin.
There's definitely been times where I've deleted it from my phone, just like, okay, just when you're on your computer, then maybe. But I agree, it's a great tool. I mean, that's how I found out about you and Rebel Allocator, and I'm so stoked you took the time to spend with us here and provide some insights on both the book and what you got going on at Farnam Street, and just what you got going on from your own personal experiences. And dude, thank you for joining me today. I really appreciate it.
Well, and I really appreciate, as someone who also asks questions in interviews, like I appreciate all the thoughtful questions. I thought that was really well done.
Thank you.